Hello and welcome to the Trading Zone. I am Joe T. Gay of Equity Armor Investments. I'm here live. Thanks everyone for joining in. Shoot me a message. Let me know you're here. Tell me what you're looking at. Hope you had a great weekend again. Stocks flying all over the place. Really fascinating action. I'm going to be talking about Google, one of my favorite stocks right now, and Warren Buffett. I'll also be taking a look at Bitcoin. What's going on with that price action as we go along throughout the day. Brian will be joining us in just a minute. I'm sure he's going to want to be bragging about his first place Chicago Bears. I can't even believe it and stomach it, but it is what it is. But he's probably flying on cloud nine. If you were watching my show last week, if you read my blog last week, I talked about how following the Detroit Lions can be like following the stock market. It's never as good as it seems. It's never as bad as it seems. It felt really good 2 weeks ago for the Lions after last night's loss. It feels really bad for the Lions. So I'm sure we're somewhere in between. I need to bring Brian off of his cloud, actually. I will tell him that when he gets in here in a minute. But we'll be getting into stocks as we go. I just want to bring this up before we go. Make sure to check out the Ripple Effect blog. It is on equityarmorinvestments.com. You can just click on the Ripple Effect right here. Today's blog went out to you. If you were a subscriber, you will see I took a deep dive here on what I was looking at when Warren Buffett came in to buy Google. It's kind of important for a market perspective and a volatility perspective. It's really important too. You'll notice historically when Buffett goes into a stock, it really lifts the stock, number one. He's probably going to continue to buy it, number two. But another thing that happens is if you think of Coca-Cola, when he got into Coca-Cola, he is actually selling puts to the downside in Coca-Cola to buy into the name. Very likely that something is happening again in Google here today. Remember, he's got $380 billion in cash on the sidelines. So very likely using that cash secured puts being sold. He loves doing that and is probably getting into Google with that. So that sort of volatility sell very likely filtering through the rest of the market. Absolutely. It's going to keep a dampen on volatility. It's kind of built in by the dip mentality. Another thing we need to just consider here as the market just continues to fly all over the place. Let's just get a quick check on the market here. Kind of flat on value on the Dow, down a little bit more. No, actually, we are up actually in the S&P 500. Nice little bounce there, actually. So nice work. Tech is doing even better. NASDAQ even higher than that. So another rotation here actually going through. Buffett doing work as usual. So with that said, let's get into the big stories of the day. Stick around through the end of the show, though. By the way, we do have a trade coming through. It is related. It is adjacent to the Google Buffett news. So stick around to the end of the day and stick around for that trade. Trading Zone subscribers already have that in their email box. Let's take a look at volatility for 2025. We're elevated, no question about it. Volatility is on the rise here. Just kind of seems like there is there's just like some angst, some hiccups, some undeniable worry out there in the market. We're past the government shutdown. The question is, did it do damage? Is the jobs market teetering out of control? We don't know. We will get jobs data coming on Thursday. That's going to be big for the market. It's going to be after NVIDIA. So really big news this week. It's just phenomenal how it seems like every week there's just really big, important news for the market. Yes, we're going to be trading on the short term, but the bigger term trends are going to be in place regardless of what happens on those two events. Another volatility index we watch closely on this show, of course, is the MOVE index. This is still low, guys. This is still really cheap. We got hammered here all throughout the year. Remember, this is what happened. This is what happened when we had Liberation Day and all the tariffs coming out. This was when the VIX got spiked up to 80. So this is when we saw some real volatility. We are not seeing that in the same way right now. Nowhere even close to where we are. So I would need to see this change above 90 to get me to say, hey, something is different with this market right now. Now, there's no question there's some single name volatility. There's no question there's some Bitcoin volatility. There's some risk off and rotation happening in a big way in the market. But it doesn't seem like the economy is teetering out of control or there's any big credit defaults happening here with the stock market. So another thing, just watching, if this spikes above 90, I'm going to take notice. Absolutely. I'll let you know. It's something we'll be watching closely as we go through. Another thing we watch closely, as you know, is the skew index. The skew index on the higher end of the range. Maybe a chance for volatility to come off a little bit here. Again, another signal. It's not spiking out of control. It's not going haywire and crazy. Just something we're keeping our eyes on closely. Obviously, you know this is the difference between the 25 delta put and the 25 delta call in the S&P 500 30 days out. So just a sign that right now the put is a little more expensive than normal as we're going through here. So maybe protection is a little bit too expensive. Maybe the calls are a little too cheap. We'll see how that plays out. I'm going to give you some ideas and thoughts here as we get into the trade. That does go into the trade, of course. We're playing off of an expensive put and a cheap call in our trade, but it also goes right into what I'm seeing in the market too, as we're going to go through here. Bottom line in the VIX futures curve, they are elevated. There's no question about it. They are flat. That's another sign of elevated volatility. We are just up there when it comes to the VIX here. So there's some palpable angst here. Again, we were here a month ago, so we've been hanging out here for a while. Really some back and forth rotation. Kind of an important spot for the market. Really important, obviously, that we see the jobs number not cratering and showing that the economy is deteriorating faster than we had thought. And the NVIDIA number, the AI trade is NVIDIA. So the NVIDIA earnings are going to be absolutely critical as we go through here. Like I said, no surprises here. This is what we've been talking about. Fed data is going to be, Fed minutes. I don't think anybody's going to care about that this week. Normally we'd care about it, but we're getting some big data. We're getting the jobs data this week. We don't usually get it right now. We're getting NVIDIA. That's going to be a really big moment too. Flash PMI, that will be important on Friday also. So just something to think about. So here we have the S&P 500, another kiss of the 50-day moving average here. Something we're watching closely. Maybe this is a sign of support. Maybe it's a sign that the market's breaking down. A little bit of a double top action. Again, more data is going to be playing out here. We'll be watching it all closely. Really, really nervous, anxious moments here for the market. I think a lot of people are watching this, maybe expecting this to be support. This might be why the VIX is so high, or maybe there's just more angst out there in the market. Of course, the VIX is global. There's lots of other things happening in the world economy. There's a lot of uncertainty with just everything in the world. So there's many potential reasons why the VIX being where it is. But yeah, for me, this is it right here. If we lose this moving average, we could see a bigger pullback materializing. It really will change a lot of the technicals for a lot of the charts. And not surprisingly, a lot of the other charts look the same. We have the NASDAQ struggling here right about at its 50-day moving average. Now, if this turns out to be support, that's great. And I think we should treat it as such until we're proven otherwise, but just something to be very cautious of. It makes sense that we see a lot of people having protection on, and this goes hand in hand with looking at things like the CNN Fear and Greed Index. We are at extreme fear right now. So the contrarians out there are saying, okay, we're extreme fear. It's time to buy the market. That's certainly possible because, yes, when the market does hit a bottom, you're going to see everybody is bearish. But it's just a question, are we at the relative low or not? Time obviously will tell. I think it makes sense for me. I just have to say, yeah, this is a cautious time. There's no question about it. I'm more cautious than I am normal, but I'm always bullish on the market because I have a long-term view on the market. I'm not always thinking about my next trade 24 hours ahead. I'm always thinking about 10 years ahead. So I think 10 years from now, the stock market's going to be higher. There are so many exciting things out there happening with the stock market. But at the same time, I am currently hedged, so it makes me sleep easy on the market. I don't know if you're watching here. It looks like Brian is trying to come in. If he can come in, he'd be happy to jump in. Oh, Brian, welcome in. I'm just talking about my philosophy here. I see a lot of just so everybody knows, Brian and I, we're hedged equity managers. We manage a rational equity armor fund. We're protected to the downside. I think I follow a lot of other hedged managers. I follow a lot of volatility managers. It almost seems to a man to me, Brian, they are perma bears. They're always telling people the market's about to crash. You need to buy my fund for protection. Get out of the market. Get into my fund. I think it's so interesting. Like for us, I think we're mostly perma bulls. Like we just have this long-term view. I believe in capitalism, first and foremost. I love America. Secondly, I think we have American exceptionalism. The best companies in the world are here. Money flows to America. The technology is just building on itself. This AI thing is just so exciting in a nutshell, and all these companies are here. Now, at the same time, Brian, yes, I'm a former VIX market maker, former S&P 500 market maker. I am protected. I am sleeping very well at night, knowing that if there is a crash, I'm protected. But I'm also protected to the upside because if there's a big rally the next quarter, my fund is going to capture it.
Well, that's why I think our strategies have done so well this year, Joe, is that, just getting called away to the upside or just simply only protecting yourself to the downside, waiting for the crash, what we found over the years just doesn't work. So when you can kind of participate and, mitigate the risk, but still have some upside participation, that certainly generates better compounding returns than a lot of strategies out there. So, yeah, I mean, especially when you look at this chart on the NASDAQ, right? Like it's had a huge run. We've done pretty well with our strategies, holding either the NASDAQ itself with our volatility hedge in one of the funds we manage, or having some of those NASDAQ kind of names in our other fund. You get to participate when this chart goes from the lower left to the upper right. And, we still have the hedge on, and it's probably the VIX, sitting here at 20, kind of in the middle of things. So I don't know. What do you think of the markets? Do they break from here?
Yeah, it could go either way. Of course, there's really big news this week. We got heightened volatility ahead of all this news. So I'm expecting a move one way or the other, Brian. I'm expecting we're going to go back to all-time highs, or we're going to break below this 50-day moving average and could potentially test the 200-day moving average, which is certainly much lower. I want to shout out to Doug out there. I think he was when I was talking about the bears of the other hedge fund managers who might be bears. He said they might be fans of the Bears. And they probably are. A lot of Chicago managers out there. And I think if you're fans of the Bears, you are flying high right now in first place of the NFC North.
It's been a good run, just like the markets, right?
Absolutely. Thanks, Doug, for that. Semiconductors out there, they are flying high also, Brian. We are cruising here, but well above 50 moving average, but we're at another spot. Hey, maybe this is a relative low. Maybe this is a time to buy some tech. I have a trade for us. I've been teasing, Brian. It's Google adjacent that we will be putting on in just a few minutes here after I want to talk about Google, and I want to talk about Bitcoin for just a hot second too, if we can. Here's the Mag 7 index. This absolutely kissed the 50-day moving average, no question about it. Getting a bounce today with the Google news. Really, really interesting to see. The market's just kind of flat sideways. Without Google, it definitely would be down, Brian. So it really kind of interesting market action. I think we're just waiting. We're waiting for this jobs data. We're waiting for the NVIDIA news. We're just kind of sticking out here. But finally, I look at this every week here, just looking at the bubble 95 through today. I just want to keep this fresh every week in our minds that we're in the middle of potentially a bubble. Maybe it's going to pop sooner than I think. Maybe it'll be, about to just collapse, going to zero, or maybe we're looking at what we're looked at in the mid 90s, which was formative years for me, high school years for me. I remember just like watching the NASDAQ just being like, it just flew higher, and it would be up like 200 points, and it would just be like, this is insane, 200 points, when it was like the smaller index, which grew into the larger one, just like that. It was just phenomenal to see the NASDAQ moving around, and we are just having moves like that now. We should just accept that we have higher PEs. We should expect that, and we're finally starting to see a little bit of debt spending. We talked about this very briefly last week. I want to add on to this Amazon big debt sale today too. We know OpenAI out there is spending a bunch of money, and this is just a big comparison. And I'm going to bring it back to Google, which of course we know Warren Buffett bought a big stake in Google, kind of remembering out there that he bought about $4.5 or $5 billion worth of Google. He's got like $380 billion in cash, Brian, on his balance sheet. So when he buys a company, first of all, it usually does very well, but he also just starts to build more and more stake in it. So he very likely selling some puts in Google to the downside, very likely using his cash as some cash secured puts. That's going to have an effect on the volatility space at large. Absolutely. It's going to be a dampening effect on the volatility for a fund as a company as big as Berkshire selling some volatility. It's going to filter through the rest of the system. So we should keep that in mind. We should also just kind of keep in mind that there's kind of a buy the dip mentality on that too, where it's going to be an exchange of shares where he's going to be taking those shares if it does indeed fall. But I was just kind of thinking about it bigger, and just, the moat that Google has. And I think the big race on AI, at least for the LLMs, is essentially ChatGPT versus Gemini. Gemini and ChatGPT. And maybe it seems like ChatGPT has like an edge right now, but I'm just kind of looking at the deals that OpenAI has done, just kind of comparing that to what Google has like in their infrastructure, the Alphabet infrastructure. And it just kind of says, wait a minute, maybe Google's in really good shape, just kind of looking at what OpenAI is doing. So yes, they have deals they've been in place with Microsoft, one of their backers. They are adjacent to all of their corporate enterprises, and just that whole data set that they can tap into. They're have a deal with Amazon Web Services. They want to be adjacent to the world's largest e-commerce consumer. They want access to that data, and of course Oracle, they want to be on that data cloud server too. They will be adjacent to TikTok, lots of videos, and of course you can see where I'm going with this, Brian, that Google essentially has this in-house. They don't need to spend any money on it. They don't need to borrow on it. This is just like their data they already own. They own YouTube, obviously. They have the human search, obviously. So what I think the race is for right now is to have just the name brand LLM. Now, when somebody searches something on the internet, they don't say, I want to search the internet, Brian. They say, I need to Google something. So the question is talking to a language bot, is it going to be, I need to chat GPT something, or I need to Google it or Gemini it, or whatever the case may be? I think that's the race right now, and Google has a big advantage from where I can see versus OpenAI.
What do you think though? Like, why Warren Buffett now? Like, why is he purchasing Google? I mean, after all these years, you had chances to grab this company at a lower valuation than most of its tech counterparts. He never did. He loved Apple, obviously, still does. But why Google? Why now?
Well, I think it has everything to do with this race right here. I think they are going to win this LLM race. I know Munger has said that his biggest regret was not buying Google. He said it back in 2019, 2018. He said he missed Google. He wished he had bought it. And then going back to valuations, looking at all of the AI companies, Google, while it's trading at 24, maybe that's rich for Warren Buffett's tastes. Typically, it is cheaper than its peers. It is a lot cheaper than the rest of these tech companies. It's not trading at 40 times earnings like some of the other ones out. This is a 24, and it's growing its cloud business dramatically. So I think the moat it has is with, well, first of all, you just, like I said, when you're searching something, you just Google it. You don't do anything else. Second of all, they understand how they became the brand name search. And for me, going back to the 90s, it was when Yahoo was the biggest internet company in the world. They sold their search to Yahoo. So Yahoo paid Google to search. The most people were searching through Yahoo, and that simple action, they got paid for it, and they became like the best option for search to do it. They sold Gemini. They sold their AI services to Apple. They are now going to get paid by Apple to use Gemini, and I think that is why they are going to be the brand name large language model search. Very simple.
Yeah, if that's the case, I mean, look, Google's one of our bigger holdings that we have for clients. We believe in it. We've been with it probably earlier than Buffett maybe declared he was with it. So, the upsides there as a leader. They obviously have the supercomputer factor that maybe comes down the pipeline a few years from now. So
they're winning in quantum, and no one's going to be able to spend the money that they have to catch up in quantum. IBM is interesting. They have spent a lot of money, and they are doing some interesting things, but they're still behind Google when it comes to quantum, which is just fun. I mean, there are a lot of fun and high-flying quantum stocks out there, Brian, that are trading, at ridiculous valuations and have never produced a single product. And then there's Google, who's actually like building real quantum chips, studying it, practicing it, has the money to do so. So everything else is just kind of theory with all these other quantum companies.
Yeah. So, all right. So our trading zone, we give a trade every week. We update that throughout if you have a subscription. I know you've been alluding to the fact that you have a trade here. So what is the trade for the week?
The trade of the week. This is a company that Google owns about 12% of, Brian. This is ARM. It's a chip maker. They partner with Google. Google's working on some chips that they're going to be making with them. They're still going to need, obviously, the NVIDIA chips and a lot of their AI training models. But when it comes to pairing the AI on a chip to go with some hardware products that are further out there, ARM is the leader there. So ARM is kind of a third-party chip designer. They don't actually make any chips, but they make the design of the chips, which of course goes out there. Another fantastic company is kind of this is kind of like a second wave of the AI trade. Another hardware trade. It's kind of like a combination of the hardware and the software, actually, for me, because for a lot of this AI to get out there, we talked recently about Tesla and their robotics. It's going to be a merger of the AI chip, the AI brain on something physical. I think you're going to need a lot more chips out there. ARM is out there designing them. So yeah, for me, this is a no-brainer. Absolutely love this company. Absolutely love their connection with Google. And if Google is going to succeed, Warren Buffett's backing Google. ARM is also going to succeed. I have a trade design here. I talked about at the very beginning of the show, Brian. The SKU index is on the higher end of the range, which means puts are more expensive than calls are when that happens. And I did the following. I also expect a rally for the next couple months. I want some protection if there is no rally also. So that's what I designed, Brian. I'm selling January expiration 140, 120 put spread. And I'm buying January expiration 145, 180 call spread. This will cost me $2.45. Again, I could lose this. I could lose $20 here if it goes to the bottom, goes through 120. I could lose $141, $142 if I bought the stock. So it's less potential loss in buying the stock outright. And of course, I have almost all the upside all the way to 180. and it cost me a lot less money to get into this trade too.
Do you do this trade though? Let's go back one slide and take a look at the charts though. Do you do this trade? Do you sell the put spread first right now, wait for the stock to trade back up to the 50-day moving average, or you're thinking this is going to get back to that 50-day moving average and you put it on?
Not pictured here is like the 200-day moving average, right about 139.5, just so you know. So the 200-day moving average is right about here. So I'm kind of hoping for some support right there, obviously. No, I mean, this is just a bullish trade. It's kind of, I can readjust if we do bounce up here to the 50-day moving average, no question. I want to finance my upside by selling the downside put. Absolutely, it kind of seems like this is just a range-bound name here. I'm thinking 120, 180 really seems like the range on the lower, maybe middle to lower end of the range here. I think it makes a lot of sense to go back and test that upper end.
So this is as a bullish delta, like we call it in option trading, a delta where for every tick up $1 up in the stock, the option trade will move that percentage, that delta percentage amount of that $1 move. So by having both in there, yeah, I like that. You finance the call spread by selling the put spread. You've limited some of the risk on the downside. So if somebody wants to take a little bit more risk on this trade, they can, because you are protected with that 120 put. This is almost like a structured note that you see with like participation rates to the upside, where you're willing to get called away. In this situation, you have 100% participation above that long call strike. Until you do get called away, you don't pay a lot for this trade. If this allows you to keep cash sitting on the sideline, collecting interest while you have this, in your portfolio.
Yeah, you called it. Absolutely. It's a lot cheaper than buying the name outright. Get to earn a little interest on that cash also, or just have a little bit of leverage on, I guess, is another way to think about it too.
All right. Well, that kind of wraps up the show for the week here, Joe. Tune in every Monday, right? At good old noon Eastern. Every Monday, we're here talking through Tradier Hub. We thank them for producing the show. Go check out equityarmorinvestments.com. You can follow Joe and I on X at Brian Stutlander, at Joe Tige. And make sure you tune in next week. Have your lunch, get a trade, make some money, and we'll see you next week.
Have a good one.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.